up, guys? I hope you can hear me and see me clearly. Let me put this camera properly. Hey guys, what's up? What's up? Been a long time, right? So we are in an exciting time today. We're going to have an exciting video as usual. I always have exciting videos, and this is going to be about the latest bond that has been released by the government of Kenya. The sale closed yesterday. As at the time I'm shooting this video, we just closed the sale, or they just closed the sale, sorry. And for those of us who are bidding, we have our results already. We've been accepted. Those who have been rejected, they know already. And that's how it happens, right? Some people get in, some people not in. Depends on how you bid. Mine was terrible, to be honest with you. I'm gonna tell you about that. Anyway, guys, hope you're well. Hope you're enjoying the videos. Let me know in the comment section. Share it with your friends. Let's learn about finances. Each time I do something with regards to investing, I learn something new, and it tells me how much there is to learn when it comes to investing. So make sure you're sharing with everyone around you to make sure they know what they should be doing, right? Financially speaking, trust me, investing is the only way out. Some people keep asking the question like, oh, with inflation and everything happening, is it a good idea to be investing right now? And I can tell you for sure, invest at any time. Be consistent with it. That's the only way you win this game. You have to be disciplined. You have to be consistent with investing. So right now, things are really good. For those who invest in bonds, things are going really well. And you know it if you're in Kenya. You know it if you're a foreigner investing in Kenyan bonds or Kenyan bond market. You know what has been happening. The rates are interestingly good. Of course, we know the reasons why. We'll talk about all that. But we're going to look at the bond that was offered. And the rates are crazy. My God. I've never seen those rates for a long time. Not just long time. I haven't seen them, to be honest. Like, if you go historically, like way back when I was still a kid, there was like 16% on bonds. Right now, we are hitting that level. We are hitting that level, guys. And this is non-taxed. Tax-free bond at almost 16%, 15.837 to be specific. Anyway, let's get into it. Remember, here at Ken's Money Matters, we talk about the money mindset, how to make that money, how to enjoy that money, how to manage that money, how to invest that money, and how to assure yourself of a lifetime of income, basically financial freedom. So this time we're going to be talking about the bond that was offered by the government. I'm going to share my screen, I'm going to show you everything, the bidding process, my experience, because I did bid for this one and I was accepted, but there's a but. So I'll just share my screen. Let's go through what was offered this time. I've done so many videos on bonds, but there are some specific stuff that I wanted to know. Now that I did bid for this recent one, there are things you need to know so that you can be better and you can be accepted, and you don't have to pay a premium like I'm gonna pay, and you don't have to like worry when you do your bids. Okay, so let's get into the video. Let's get into the screen share. This is the website of CBK. I always say anytime you want to get information, just make sure you are on the right website and go specifically to this CBK website so you have all the information right. Anyways, so this is the website. You always come here. There's home. If you want to look at securities and you want to invest, you do it here. You come to treasury bonds, and here you can always, get all the information about treasury bonds. I've spoken so much about this already. It gives you everything you want to know about treasury bond, the auction process, the advantages, secure, regular, flexibility, auction monthly, gives all the step-by-step guide into opening one. What are the requirements for an individual account, for a corporate entity? Then you decide what you want to invest. There's treasury bonds, infrastructure, zero coupon bonds, which are similar to treasury bills. Then you go down to complete and submit an application, which is what I did, but I didn't do it this way. I actually did mine online. You can do what we call TMD, direct mobile something. What do you call it? I just know it in short form. But basically, I can do it on my phone. I just need to dial *866# and then it gives me all the options. And then I can bid online. I don't need to fill any papers. I'm actually not in the country at the moment, so it makes it quite easy for me. That's one of the things that CBK has done well. Then when you go through auction or the bidding process, then you get to do your payments. You can do it through CAPS or RTGS, anything above 1 million. Below that, cash or banker's check. Then you get your maturity by annually But everything is here. I've spoken so many times about this. Watch my videos on this topic. It's been really good. I've given all information when it comes to investing in bonds and the process and opening a CDS account and why it's good to invest in these bonds. That's just to get information about whatever it is you want to invest in. Then you come home. If you want to look at the latest ones, whether it is the ones on offer or auction results. So right now we're talking about the one that was closed yesterday. So that's a result. Here we are. So here we're talking about 7-year treasury bond that was on offer, IFB, blah, 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 and all that just to identify the bond. This is the result. So if you want to look at the offer itself, you can go to the same website, you can get the offer, look at the details and how it was offered and the instructions about it. But right now we just want to talk about the results, and go through a few things that I think you should know now that I did bid for this one, and there are new lessons all the time. So here we have the due date, which is basically when we get back our principal amount for those who invested. The total amount they wanted was 60 billion. Look at the received amount was way higher, 220. Then you can see the performance rate of 367%, which is way above what they expected. This is the amount accepted, which is above what they wanted actually. We have competitive and non-competitive bids. Now this is where it gets interesting. Different countries do it differently, but I just noticed that when you do a competitive bid, so when you decide, okay, I'm going to compete with everyone, right? So you're going to tell the government what you want to be paid on your money. You want to tell them, hey, I'm giving you my money, but I want this much. You are entering a competitive bid. So if the average turns out, because they will do an average at some point, to be higher than what you bid. So let's say you bid too low. So let's say the average turns out to be 15%, you bid at 14%, you will have to pay what you call a premium amount. Basically, you will pay the difference. If you bid too high, of course, you risk, being rejected. Now, remember, we are bidding against financial institutions. Retail traders are very few here. So we have banks, the NSSFs, the NHIFs, and whatever. All those financial institutions, they invest in these bonds. As it happened, I did bid low, 14.5, came out at 15.8. Crazy, not been seen before. It's crazy. Always as financial people, we try our best to use facts and logic to analyze, whatever is happening in the markets, to make predictions, but it's never right. Don't let any financial guru tell you that they're always right. They're wrong. They're lying to you. It's never on point. So at some point you're just off with the analysis, because what you're doing here is that economics depends so much on people's feelings, people's emotions, how people feel about the economy, their thoughts about the economy, the government, everything else, and that's how they ride the economy. So if you try to predict that accurately all the time, you're going to be lying to the people or to yourself. So even if you listen to financial analysts or financial gurus, take it with a pinch of salt, including from me. So like this time I did bid low, because I didn't read the environment properly. I didn't do a detailed analysis, because I thought, okay, I just looked at the historical performance of infrastructure bonds, what rates the government has been willing to give, the fact that this is an untaxable bond. I was like, no, they can't go beyond 14.5. So at some point I actually thought, this is too high, I might get rejected. Then boom, the government, the institutional money came and they pushed the government to a corner, because there are so many factors right now that just pushing the government to a corner. They're boxed into a corner. So they have no option. They give good rates. So 15.8 not been seen. I haven't seen myself, to be honest. It's the first time. I've seen way back. There was a time it hit 16%, but that was way back. And that was like a fixed coupon treasury bond. So it wasn't an infrastructure bond. If you have someone advising you, you can enter competitive bids. But if you don't have any information, if you don't have any knowledge, if you don't have anything about the ground, if you're outside the country, get someone to advise you on what rate you should bid at. It's good, helps you a lot, because you end up not paying that premium, the fine, I would call it a fine. And you also end up not being rejected because you might bid too high, right? You might be too optimistic. Non-competitive bids is basically zero. So you tell the government, I don't want to compete. I don't want to, just give me the average. Whatever the average out of all those people who are bidding, I want that. You will definitely be accepted into the bid, and whatever it is that the government gives is what you get. The other thing is that when they do the market weighted average, so the coupon rate, like you can see here, they've done 15%, 15.837. What that means is that everyone across the board gets that amount. Everyone gets this amount, 15.3.837. But so if you are too low, you pay a premium to get to that amount, right? You pay the difference. Okay, if you bid too low like me, there's an amount you pay. Like I'm going to pay quite a lot of money actually. And if you're too high, you get rejected. So You need to be in a position whereby you are safe. So if you're not sure how to bid or what to bid, just do average. And I would advise most people who are doing it on their own, not through brokers, not through banks, to do it on average. That's the main lesson from this bond. Okay, this bond issue. The main thing here is that learn on how to bid properly. Make sure you know what you're doing. Make sure you understand the environment first before you place your bid. Even if you are someone who is into finances, if you are someone who knows about investments, because sometimes if you are outside the country, you might not understand the environment so well. Those who are in the country, like the banks, the brokers, they operate in there daily, they know what's happening, they analyze it, they study it, so they might not be exact, and that's why there's a bidding, there's an auction. Nobody will know exactly what the government is going to offer or what the average is going to be, because everyone is just bidding based on what they feel. But there's an area whereby you shouldn't really go out of, so it gives you some safety nets. So try to get someone to advise you, try to get someone to give you more information. There are a number of reasons why this is happening, and that's what I would say. So number one, look at the economy. The economy is all messed up right now. It's a slowdown, there's no manufacturing, we are importing everything. The shilling is under the pressure from the dollar. Right now we are exchanging pound at 174. I have never seen that since I was born. Honestly, I've always seen the pound at around 145, 150. If it's so bad, 150. This is the first time I've seen the pound at 174. I can't remember the last time people even experienced that. The dollar is hitting 140 as we speak. So that's really crazy. The dollar has been always 90, 100, 99 something to 100. If it's so bad, it's 110. Right? That's really bad. Backed up by all these excuses of, Ukraine, oil prices, COVID, and all these things. The economy is recovering from these impacts. There's also the issue of the way the government is running the economy is just not efficient. So the previous government was heavy on borrowing. This current government is borrowing as well. We have the Euro bond, which is a big debt maturing next year. Investors are worried if the government will default on that, and that can have lots of ripple effects within the economy. So there are so many things that push the government to borrow domestically and avoid foreign borrowing. President Ruto's administration has been quite clear on the fact that they want to limit foreign borrowing, which is quite expensive, and focus more on taxes that they collect internally, and of course domestic borrowing, which again, maybe they have a plan, maybe they don't. We don't know what's happening, but these are some of the factors that are pushing interest rates to be so high. Inflation is at an all-time high right now. We are at like 7.5%, always 8. I can guarantee you it's at like 10%, in all honesty. Of course, they will always try to play it down, but inflation is crazy right now. So if you're having your money in the bank, waste of time. Right now, money market funds are giving like 11.9%. If your money market fund is giving you 8%, 9%, you just barely covering inflation rates. All these factors has pushed the government into a corner, and therefore they are willing to give that kind of rates. Now remember, most people are bidding for these things are like institutions, and they do put in loads of money, billions of money. So when they push the government with that high interest rates, the government is likely to accept it. And that's why retail investors like us get also, the advantages. But if you bid the wrong way, all those banks where you put your cash, liquid money, this is why they invest the money. They get their 15.8%, they give you 7%. What are they making out of you? Double them with your own money. That's how life is. So guys, I hope this helps you. This is the bond that's been on offer recently, and that is a historical rate. I just thought I should put a video out there. Watch out for the next bonds. It doesn't have to be infrastructure bond. It can be just normal fixed treasury bonds that are just taxable. But still, if you're getting, let's say 15%, if you're getting, let's say 16% out of it, it doesn't matter if they are taking 15% tax. You're still good to go, because if you look at inflation, like I just said, you're still reaping really good results. So I would say try to invest. Watch out for these bonds and invest. Don't wait for the infrastructure bond. The earlier you begin, the better. Remember? Now, the other thing is the term of the bond. This bond, most people like it, and personally I like it because the duration is not so long. Sometimes the longer, not sometimes, most of the time, the longer the duration of the bond, you're giving them your money, you're taking higher risks, because things might get better and you have your money fixed in there for a very long period of time. You're taking higher risks, so you expect the government to pay you better. Usually when it's like 5 years, 7 years, it's really lower, right? The interest rate is lower because your money will be back in your pocket in the next 5 years. That's good. 7 years, that's good. But if you're thinking in 25 years, you're like, okay, I need you to give me really good money because I don't know what's going to happen in the next 25 years. It could be that in the next 25 years, things are so good, the interest rates are like 20%, but now fixed mine at 10% or I fixed mine at 14%. So that's why when it is a long run, it gets better. But right now, nobody cares and everything is good. Everything is good because you know what? We are helping them achieve their goals of development. And if we don't, nobody can. They will turn to foreign borrowing and they will pay for it. They pay for it with blood and sweat. Anyway, guys, I hope this has been helpful. Try to get something, get something to invest in. Get something that can give you at least, right now with this kind of rates, I would say nothing should give you below 12%. Nothing. For liquidity purposes and the money that you're saving here and there in money market funds, I'm okay with 11%, 10%. That's money you can use anytime. You can access it. It's like an emergency fund or something. But if we're talking about like crazy investing, long-term investing, get something above 12%. If getting below that is bad. Stocks in Kenya, bad most of the time, right? So right now, why would I be risking my money in a stock which could go down and I have government promising to give me 15.8% for the next 7 years? Choose. You just decide on what you think is the best for you. Anyway, guys, I'm grateful. Thank you. Please subscribe, okay? Subscribe. Our next video is gonna be in Forex trading. We have to be versatile. Everything to do with making money, guys. I'm here. Another one we'll do with diaspora and coming abroad, the jobs you can do and stuff like that. Let me know what do you want us to cover. Someone told me to cover fixed income. I think fixed income accounts or something. Fixed income assets. I'll check that out. But someone did recommend a very good thing. I believe so. I'll be pointing out some of the best suggestions and then I'll be doing a video on them. Thank you. See you next time. I'm out.